It's a minor SR. What exactly does it mean? Who is controlling that line? The bears are controlling. The sellers are controlling. Very good. Thank you. Now price went and engulfed that line. So who won the show? The buyers won. Very good. What is this? Minor SR. What is this? Okay. So at least the minor major SR, you know who is under control. Who is under control right now? The bears in control. Okay. Now remember this point. We have some SR level where bears are in control. Beyond that, everything is just trying to understand whether you guys get the glimpse of it. Now let's see what price does. Now price is slowly going upwards. You know that SR line is dominated by bears. Now bulls are trying to chase. What happened? A strong bull momentum candle. Buyers are in control. So where is the first barricade for these buyers? The SR line is the barricade. If that SR line is broken by buyers, what do you call it? You will call it as an engulf. All right. Now keep watching. Another candle. What does this candle signify? That also signifies momentum and bulls are in full control. Another candle came. What does this signify? It is a base. There is a fight. Okay. Is the color of this base relevant? No. Thank you. It's not relevant. Now, can you understand that exactly on that SR line area, exactly at the SR line area, this base is formed. What exactly is happening now? There were sellers who are controlling that zone. Now these bulls went up. They are fighting those sellers. And hence the doji is formed. This doji is telling us that this is a moment of indecision. There is a fight for dominance. Till now, can anyone tell me who won the battle now? No one. No idea. Absolutely. We don't know. Now tell me who won the battle. The buyers won the battle. Okay. The buyers won the battle. Now rewind. Go back. What exactly happened? There was a barricade. The barricade was a major SR. Bulls came with lot of strength. Exactly at the SR line, there was a tug of war. And the small base candle, doji candle signifies that there was strong resistance, strong revolt from the sellers. But eventually buyers won the game and passionately departed from that level. Is there a zone now? Before it was an SR line. Where is the zone? Which is the price structure here? It's a rally base rally. Excellent. Thank you. Now can I mark the body to wick condition? And that is my proximal line. This is my distal line. And this scenario, we call it as a flag limit. And when price comes inside that zone, we expect it to strongly react. An excellent question by Kamal. He's asking Ashok, but there is no retracement of after first engulf. There is no need for an. There is no guaranteed retracement anyway. Vikram is asking Ashok, but the base candle did not engulf. Now, the answer to this question is simple. So when you win the war, will you tell no, the match was not won on the 49th over, end of the over only we won the match? How does it matter? Who won the battle decisively is what is the key. Now go back to the English that we studied. We said institutions need time and liquidity to offload. Remember? Now, time, the institutions in this scenario had enough liquidity to offload, but they didn't had enough time to offload. Let me come back. This was a strong barricade. Sellers were dominating. Tug of war happening. And after this, buyers dominated the scene completely. All sellers are killed. Now, who is controlling this zone? Who is controlling that zone? The buyers are controlling that zone. And since the price moved in a state of urgency, the institutions which fought this level could not fill all their orders on time. Lot of pending orders got stuck there. That is why the next time price comes there, it gives a massive reaction. Now connect the dots. Apply enhancement theory 1. Departure. Why departure is important? What does strong departure tell you? It will show the strength. What if price comes below distal line? Stop loss hit. That's all. We lost money. What more, Vishal? Okay. This pattern is called as flag limit. So what are the rules for flag limit? Let me draw simple rules for flag limit. When do we call something as a flag limit? Rule number 1. An SR line is formed. Okay. Now, can you tell me it should be a minor SR or a major SR? No, it can be any SR. It can be any SR, but major is good. Major is stronger resistance. That's all. Significant SR. Excellent. Step number 2, SR line broken. Step number 3, there has to be a base, and that base should be cutting through the SR line. Can you see this? The base is exactly at the SR line is cutting through the base. How many of you make out? Everyone notice that? I want participation, please. It has to cut, the base has to cut through the SR line. I'm sorry, the SR line has to cut through the base. Okay, when such a scenario is formed, we say that FL type 1 is formed. Okay, There are only 4 rules. Rule number 1, there is an SR line. Rule number 2, the SR line is broken. Rule number 3, there is a base exactly at the center of the SR line. Okay, and then naturally it has to break out of that SR line with a strong departure. You need to superimpose the enhancement rules, and at that time we call a flag limit is formed. Now, can somebody tell me when did we decide to take the trade? We decided we declared that this is a flag limit at the close of this candle. This candle defines, this is the candle. So when the close of this candle, we decided that this is my long entry and this is my stop loss. Do we have enough time to take the trade? Okay, I am not addressing many questions right now because I need to ensure I clearly explain all the principles, and I take the questions at the end. And I know most of them gets answered. Okay, if I'm not answering, kindly don't mind. Up to this much is clear. There are only 4 rules. There has to be a barricade. The barricade has to be engulfed. After the barricade is engulfed, the base formation signifies the war. What signifies the war? The base is telling boss, this is a point where the sellers and buyers had a big fight and buyers won the battle. And not only that, the strong departure from there told us that the buyers are equally strong and superior. They have lot of orders which does not get filled. In the example of your war or for fort, when once the fort is captured, the buyers left people in the fort. Why would anyone leave a fort after it is captured? Don't you think they will take over the fort, put their army to defend the fort? How many of you get that? Once you capture an enemy fort, that is yours. You'll put lot of resources there, and next time the enemy comes back, I will push him back. The second time enemy coming back is your trade. Which is FTB here? This is your FTB. This is your trade. So you have sufficient time because you decided the trade here at this level, but your entry is this level. That is why we always say we are retracement traders. Our levels are already known in advance. Today, end of day, I can conclude what trade I will take tomorrow, what is my entry, what is my stop loss. Okay, all right. Now, Amit is asking, Ashok, why you have not taken wick to wick? I don't mind taking wick to wick also. This can be your proximal, and if you want to trade wick to wick, that is your choice. But Ashok, as an individual, loves low risk. I always trade body to wick. I never trade wick to wick. If I trade wick to wick, it should be very, very less risk. Most of the times I trade body to wick because I'm used to it. And what is my risk? I might not get a trade. I don't care. I'll get a trade tomorrow, if not today. All right. Now, don't you think you can put a limit order in this game? Because your price is already gone up. Price has gone to 120. You can put a limit order at 100 and stop loss at 95 and go to your office. That is the beauty of price action. Okay. Amit is asking, Ashok, do we need to see arrival also? Absolutely. Arrival is also equally important. If arrival comes with series of gap downs, it might trouble you because your enemy becomes Australia and not Afghanistan. Anand comes with an interesting question. What if a momentum candle breaks SR line instead of a base candle? Then it is not a flag limit. Okay, now let me draw some interesting things. SR line, price goes up, base, traveled, base, zoom. What is this, friends? Step number 1, SR line formed. Step number 2, SR line broken. Step number 3, base formed. Therefore, this is a demand flag limit. Tomorrow, if price comes back into this zone, I will take a trade here, an entry here with stop loss here, and I expect the price to react. Clear? Okay, let me draw something more. What is this? It is nothing. It is not a flag limit. Absolutely. When will this become a flag limit? This will become a flag limit when price this is flag limit. Is that clear? Yes. Simple, straightforward, only 4-step rules. Rule number 1, SR formed. Rule number 2, SR broken. Rule number 3, a base cutting through the SR line. Rule number 4, wait for retracement at flag limit. Sir, this pattern is for what kind of trade? It can apply, you can apply this in any time frame. Any time frame where there is enough liquidity. Varshil says, can we take the trade if momentum breaks? No. Then it will not be a confident trade. If the SR line is broken by a momentum candle, there is one more story. Okay, that is version 2. We have multiple scenarios. We have flag limit, 1 engulf, double engulf, opposite engulf, dual engulf, 4 engulf. Every variation of engulf is a pattern. All you have seen is only single engulf. We have up to 6 engulf scenarios. And we will do that one by one in a structured manner. Varshil, is that clear? Okay, sounds good. So let me go and pick up the next scenario. What is flag limit zone 2? What is this? It is a minor SR. Major SR. Now don't think every time, okay, for a flag limit, first a minor SR should come, a major SR. No, nothing like that. I don't mind removing this also. Okay, I can delete it also for you. It need not be. Okay, we just need an SR line, that's all. Okay, it's a major SR. Price went up, buyers under full control. Now buyers went, it broke the SR line but close below it. What is this? Is this flag limit? No, it is not type 1 flag limit. Now price creates a scenario like this, which we called wick to wick overlapping. Whenever an SR line is broken with two wicks overlapping each other, which are the overlapping wick? See, these two wicks are kissing each other, no? Overlapping. This one and this one. How many of you can make out that overlapping wicks? Vikram says, Ashok, is this looks like a gap up to me. Yes, you are right, it's a gap up. Okay. Question by Raja, he says, are these patterns part of the tools in AmiBroker? No. Many of these patterns cannot be automated in AmiBroker. It has its own limitations. I'll explain you. Okay. Whenever the SR line is broken by overlapping wicks, then we call it as a flag limit type 2. Okay. Now we put the zone. We wait for our buy trade here. How did you mark the zone? I have taken the lower part of the upper body and the upper part of the lower body. That is the zone. Okay. And this is my stop loss. Slightly below this is my stop loss. Now, and I expect the price to retrace. Now, people are asking, Ashok, why are you marking wick to wick? Well, there is no base also here. In type 1, there was a clear base of fighting. Here, base is not visible. So friends, whenever you see a wick to wick mapping, go to a lower time frame, you will sure shot see a base. Everyone understand that? Whenever you see a wick to wick mapping, go to a lower time frame, sure shot you will see a base. Okay, if you see a base, it is flag limit method 1. If you see wick to wick, it is second type. Now Vikram is asking, so Ashok, basically we are taking our decision at SR only, right? Of course. Why at SR level? Because SR level is the level where they are waiting, where they are controlling. That is a zone of war. That is where the domination changed. That is where sellers were killed. Buyers took full control of the scenario. And second time when the price comes back, I am taking the trade. Why am I taking the trade second time when the price comes back? What is all the support resistance traders who trade, they will take trades here. You know, all the double top traders, short, short, stop losses are here. Some put stop loss here, some put stop loss here. Correct? That's how the support resistance traders trade, right? Now, what happens when there is a gap up? They're all confused. His order is triggered, stop loss also triggered. How many times it happened to you? You put a limit order with a stop loss. Your entry is also triggered. By the time you realize, your stop loss is also triggered. So what happens? It creates severe panic among the selling community. Now, there are two things. Number one, your enemy is confused. Your enemy is panicking. Number two, you are in full form. You destroyed him like a tsunami. When you push him ahead and jumped on the opposite side, imagine the amount of orders you are carrying. Imagine the amount of unfilled orders you are carrying. Do you recognize that? So when we will mark the gap, we will have the proximal line and distal line. And we wait for the price to come there. And then we look for retracement. Now, what are the three kinds of concepts? Can we draw? Step number one, SR line. I'll make it into three zones. Zone 1, Zone 2, and Zone 3. Step number 1, SR line formed. Step number 2, base formed, SR line broken. This is FL1, correct? And that is when we try to look for a retracement trade and take the price away. Is it correct? Now, step number 2, case 2. SR line formed. Technically, it will be like this. Okay. Case 2. That is your point where 2 wicks are overlapping each other. And then you look forward for a retracement trade. And what is case number 3? There is an SR line. Price stop there. Gap up. And that gap is your FL3. This is FL1. And when price comes inside the zone, you take a trade. Correct? Is this sensible? This is case 1 based on base. This is wick to wick overlapping. This is gap. Case 1, case 2, case 3. Clear? Anas says, Ashok, most of the cases the gaps are completely filled. So do we need to wait till it comes? Yes. It has to come to the zone. That's it. Is that clear, friends? Anybody confused here with the 3 cases? Please mark it. Okay, no questions. So let me go further. Okay. Let me go back to the PPT. Here is a live example. SR line. Okay. This SR line is broken. Can you make out? This is a drop, base, drop. After the SR line is broken, suddenly price comes back, picks the orders and drops. If you can observe carefully. Okay. In fact, if you ask me personally, this is not my FTB. My FTB is this only. I'll pick a better example to showcase the scenario. This is a classic example. SR line broken. Then what is this? Friends, please check and tell me what is that. It is wick to wick overlapping, which is case 2. Excellent. And why it is wick to wick? If you go on a lower time frame, you will get your zone. You will get a cute smaller zone. So what happened? Step 1, SR line formed. Step 2, SR line broken. Step 3, wick to wick overlap. Step 4, trade on retracement. Is this example simple? Okay. Now let me take you to another example. Now tell me what kind of example is this? Which case is this? This is also case 2. This is also case 2 because this is not a base. This is also momentum candle only. It looks like a base. It's type 2 only. Price reacted, comes back, pick the second level orders and drops. Okay, that is F2B. Now what happened to 2TB? This is why I don't want to trade 2TB in the initial stages of our career. We should not take stunts with 2TB. Sakal is asking, is this zone valid on 1 minute time frame? It is valid on 1 minute time frame also. But Indian markets, there are very few scripts which can handle liquidity on 1 minute time frame. Personally, apart from Nifty, I don't think any other, not Nifty, Bank Nifty, I don't think either any other script will have extensive liquidity on a 1 minute time frame. I'll show you more examples. Okay, here is the live example. Now give me your attention. Okay, now let me tell you something. I want to put two cases for you guys. Okay, friends, give me your attention. This is a standard scenario. Okay, okay, price went up. This is which case? Case 1. Okay, thank you. So I will wait for my trade here. If it comes, I'll take my trade. Okay, now I'll put another interesting flavor. Okay. So what happened in the second case? In second case, what happened? It is more urgency. See, here at this point, we declared it is a flag limit. Now, the price did not travel much to come back. What does the institution do? It moved ahead. It sensed there is a possibility to go back and instantly pick the orders. It came back, picked the orders, and went up. This is also flag limit. It is type 1 only. But it did not travel long distance for you to give you a situation. Okay. Now look at this example. Look at this example. What happened? This is an SR line. This is escorts. Okay. This is an SR line. Price came here, drop, drop, 3 bases, and again a drop. After the drop happened, immediately the price went inside the zone, took the orders, and came out. It did not wait. This is also a flag limit. Okay. Now, yes, this SR line is cutting through the base, no? Exactly cutting to the base. This is case 1. This is case 1. But according to the principles of enhancers, what did you discuss? We discussed, boss, you need to wait for at least 1:5, this much departure. How much? How many of you remember? I guess the 4th or 5th formula. Correct? Yeah. Okay. But sometimes this scenario also happens. Now let me show you a couple of more examples. Now look at this one. SR line, SR line, SR line. What kind of an SR is this? Major SR. Okay. Now look at this. Drop, gap down drop, a hidden base, and then a drop. Okay. Now after this departure, price comes into the zone and reacts. Now you might argue with me, Ashok, 1:3 has not traveled. 1:5 is here. But many times what happens, whenever there is strong momentum, at least 2 to 3 momentum candles comes, automatically that zone would become confident. Yes. Shivangi says stop loss is more in this example. Now look at this guy. This is a state of urgency. A beautiful SR line, gap down momentum candle, base and drop. SR line. What type is this, friends? Type 2 or type 3? It is type 2. It is not type 3. It is type 2. Because wick and wick are overlapping. It's not gap down. And see what happened? He came down. He went ahead, kissed the trade and came out. Many times you face this scenario. See, this is what is practical is. Slowly when we start doing more and more examples, you will know when and what kind of candle behave formations will help us. You need to watch at least 50 to 100 flag limit examples. You will get a hang of it. This is my future example. Market. Who is this? Adani Ports. SR line is fine. 1, 2, 3. A good SR line. Friends, can you confirm? A major SR. Okay. Now see what happened. When I took a straight line, it is drop, base, and then drop. Okay. Drop, two bases, and then a drop. And after the drop, breakdown, gap down. And price fell like hell. How is the departure? Is that phenomenal? Now, how is the arrival? Is arrival strong? You know what happens? Mark all the zones. Look at this. Drop and rally. Okay, this is one zone. Rally, base, gap up rally. This is one gap up drop. This is one zone. Okay. Drop, base, rally. This is one zone. Show me one zone which is fresh. You can't find a single damn zone which is fresh. Gap up, base, rally. Okay. Rally, base, drop. Drop, base, rally. This one. Show me one single zone which is fresh. The only zone according to me which is fresh here is this zone. This drop, base, rally. This one. I'm sorry. I'm so bad in drawing straight lines. This guy. Apart from this, all these zones are tested. They are not fresh zones, which means the orders have already been eaten. These buyers are very weak. Whoever is coming into this zone, this great zone, these buyers are all very weak buyers. But these sellers are strong. They are brutally strong. Is that clear, friends? Is that a good example? This is my future trade. Now don't ask me when will the trade comes. Number one. Now I don't know. Number two, will it trade work? I don't know. It may fail also. But it is a good trade. Why? According to our principles of price action analysis, principles of pending orders, we find this to be a good trade. What kind of trade is this? Version 1 or version 2? Case 1 or case 2 or case 3? 100% case 1. Is this example clear to all? Did you understand the essence of departure, essence of arrival? The previous examples, I purposefully inserted those traits. Okay, they're all again out of the box. You know, there is a statement. Always respect rules, but also know when to break it. Sudipta is asking once more. Okay, dude. This is an SR line. 100% major SR. Support here, support here, support here. It was broken by this drop, base and drop candle, and the SR line is nicely cutting through the two bases that I have, and after the base formation there is a beautiful gap down, which is telling that that is a place where sellers are in absolute control. It is showing the strength. Now what happened? After all the fall, the price is trying to come back with lot of compression. Arrival is brutally slow. And hence, I wish to take this trade. Now, Ankur is telling Ashok, after the gap down, there is some base. Is that not a problem? For me, my area of focus is this. This is a clean, fresh zone. There is no testing, full freshness. Gap down is telling that there is strength. So it's good for me. Now I have one more argument. If you ask me, if you tell me, Ashok, this base is a problem, but remember, after this base, price did not come inside, no? Did it come inside? If it had come inside, I would not have taken this trade according to the principles of 1:5. Yes. Since it has traveled away, this is a fresh zone. It's not only a fresh zone which destroyed the sellers, I'm sorry, the buyers, it is also a gap down zone. So I believe this zone has strength and I wait for the trade. Let us see, after 3 months we'll come to know. This is Federal Bank. SR line, support, support, support. A very strong major SR. Look at this base and then a drop, drop, drop. 79 is my entry price. Okay. 79 is my entry price. Is this straight simple? Which case is this? Case 1, 2, 3. How many of you agree with this trade of mine? Anybody to argue? To fight it out saying this trade is not good, something like that? And friends, always remember, sometimes best trades fail, worst trades win. That is rule of nature. But you should not get carried away. And all I am telling is stop loss is inevitable. If your day is bad, you will hit stop loss. Any advice on what to do with Federal Bank? So, Rajay, are you asking fundamentally or technically? Technically, I told you, right? My next short is at 80, 79, 80. Here, I don't see anything here. I don't see a good level. This is all compression. Go to the left and see what the price is doing. Or we can discuss later. Very nice. Ankur is telling Ashok there is also a level over level. There is a level over level here. Drop, base, base, drop. This is a level over level. I even noticed that level over level. But if I take the whole thing for trade, the zone would be too big. So that is why I want to split it into two parts. See, if you don't want to wait on a positional trade, go and try intraday. You try a 5-minute, 15-minute, you get many trades on a daily basis. Even this guy, Canara Bank, 200. These are all strong levels. Tomorrow, if it comes, we can happily short it. You know what I prefer to do, friends? Whenever price comes here, okay, I will buy an option and leave it. Not this month, next month option. I will take 50 days cushion. Everyone get that? Whenever price comes to this level, I will buy next month option. I will buy a put. I'll just buy a put. Because I'm throwing a fixed betting. I'm good. Suppose I buy 2 lots. The moment price doubles, I'll cut off the 1 lot and the rest will leave it. Can we go long at current price? I don't see any price action here. This is all consolidation. We need a very good pattern. Some buy signal. Some buy signal. Okay. And this consolidation doesn't mean that this price will rally from here. It can as well go down also. Every consolidation is need not be an accumulation. It can be a distribution also for further fall. So anything you need a bit of confirmation. Look at this fellow. This is also interesting. See, there are so many such flag limits I found in the entire charts. Classic SR line, significant SR. Okay. Look at this base. This is like Sri Lanka. You remember? See, if this is India, this is Sri Lanka. This is the land below it. So these kind of scenarios would be pretty good. We need to watch these levels. When price comes to these kind of levels, there will be lot of manipulation. The smartest move, just buy OTI, buy at the money option of next month chodo, because any manipulation you can escape. In futures you need to face, if it hits your stop loss, you'll be hurt. At least in options you have a fixed money to throw on the table. Look at this guy, Piramal Enterprises. Okay, even this guy is close to the price. Even this guy is coming close. See, he's so much of consolidation. How many of you understand this trade? What type is this? Is it wick to wick? Yes, you are right. It is wick to wick. Type 2. And see what happened after that? Drop, drop, drop. And now departure is strong. Arrival is weak. Amit is asking, Ashok, when you put so far ahead, wouldn't you lose? I don't trade. I directly trade futures only, Amit. I am telling it to people who get scared of stop losses. I trade futures only. Options, I only trade Nifty and Bank Nifty strategies. I trade something called as inter-index strategy, which I will teach in the subsequent sessions. One interesting question comes from Raja. He says, what if the strong breakout from here to the zone happens like this? Are you telling something like this? Boom to the zone. Okay, that concept is called as liquidity spike. It is yet another interesting price action concept. We will talk it in the subsequent sessions. You park it. Okay, that is called as liquidity spike. So what did we learn? The first power pattern. Do not forget the three flavors, the flavors of base, wick to wick, and gaps. Always ensure that the proximal and distal lines are marked correctly. Flag limits works well in minor SR also, but major SR is always best. Now I come to Q&A. Before that, I want to show you something. This is just to differentiate and make you understand the thought process of minor and major SR, okay? This is flag limit. Now case 2. Now friends, apply your intelligence and tell me which is the best trade. And tell me why. Type 1 and 2. Okay. So it is equally distributed. Friends, please understand, this can be a major SR. I am not denying. But this is a significant SR. Though this guy is a minor SR, this is a significant SR. This is a significant SR, matlab it's a mountain. Because of the drastic fall. Is this a big mountain? Who is the big mountain? Oh, everyone, those of you who type 2, please think, which is, what do you mean by an SR? SR is a line of resistance. When this guy has fallen this much because of resistance and this guy only fallen this much, who is strong? One is a significant SR. So don't get carried away by minor major. Look at significance. This is a strong SR. I'll redraw. SR1. SR2. SR3. Best SR in all the three. Now tell me which is the best SR. If you ask me personally, 2 is the best SR. Because 2 is not only a significant SR, it is also a major SR. Everyone connect to me? 1 is a significant minor SR, 2 is a significant major SR, and 3 is just a major SR. So how do you define significance? I cannot give you a measuring tape, go and measure it. By looking at it, by the kind of travel, you can conclude, okay, this is a significant peak, which is not broken for a long time. 12,400 is a significant peak for Nifty. 10,000 is a significant peak for Maruti. It will take hell lot of time to break it. That is a level where sellers are in significant control. Here sellers are not big, are in big control. They are just trying to own it. They are already injured. They can be destroyed easily. This is a level which can be even broken by cops. For this one, we need Central Reserve Police Force. We need Border Security Force to break them. Everyone understood this concept, friends? So going forward tomorrow, when I show you minor major, you should not pick major. You should look for significance. Can everyone give me a check if you agree with this conversation? Awesome. Any questions? Is this engulfing concept simple? Okay, it's going to be very simple. The next concept which comes up next week, then now you saw only one engulf. What is the engulf you had? What did you engulf in this case? You just engulfed an SR line. In the subsequent session, you will have double engulf, triple engulf, reverse engulf. There are multiple engulfs now. Each engulf will emerge into a different story. When one power pattern fails, the next power pattern will emerge. It's like stages. Somebody wants to see summary page once more. I just put it there. Okay. So Kamal is asking, can you show how flag limit works in Bank Nifty 1 minute time frame? Kamal, go to YouTube to my channel, type my full name, Ashok Devanampriya. There is a 1 hour video on Bank Nifty. Okay, Bank Nifty 1 minute time frame. That is the title of the video. Go read it. Any disadvantages of trading these patterns in cash market? Impossible. I have friends who trade pure cash market, positional trading. I have a female friend. She is from Whitefield in Bangalore. A very smart lady. She is also a price action trader. She only trades cash market. She doesn't trade F&O. She'll purely trades cash. She easily makes around 20-25% every year minimum. In a good year, she even made up to 40%, and she's very happy with it. She never believes in leverage. She's happy. Friends, these concepts work in every asset class, index, stocks, commodities, forex, currencies, everything. Go and check it out now yourself. Always the point of breakage verify. It will tell you a lot of stories. Now my request to every one of you is go back and mark only one chart. Okay? Only one chart. The best flag limit chart you can mark. You can mark case 1, case 2, case 3. That's your choice. But just mark one lovely chart. Okay, there is a question by Amit. Ashok, is flag limit 1 better than 2 or 3? How does it matter? As long as it passes all our rules, any case is fine, no? In intraday, only case 1 will be there. Who said? Not at all. Case 2 will also be there. Case 3 also, for that matter. How many times the yesterday's high is broken by a gap up candle and price has moved in the direction? You can find many cases. Dibyakant is asking what time frame for intraday. As I told, for stocks and all, minimum go above 5 minutes, 5 minutes and above. Index 1 minute is also okay for bank nifty. Nifty maybe 3 minutes, 5 minutes and so on. Okay, so now next session post lunch, it's all practical sessions of whatever we learned in the last 5 sessions. In that session we mark many more charts. Okay, we will go into intraday, we'll pick up some more examples and we'll do a lot more scenarios on this flag limit. Until we get a hang of this, we will not move to the next phase. Sounds good, friends? Okay, great. So with this, we come to the end of the first power pattern session, the flag limit. I hope everyone enjoyed it and we will resume our session post lunch. Thank you very much.